Hi, this is Manesh Patel with Valetax. Today, we're going to go through another Ichimoku workshop. We've been taking the Ichimoku Kinko Hyo, the Japanese system, and we've been breaking it down through all these different workshops. Initially, we had a workshop that talked about the sentiment. We talked about the cloud, how to determine the sentiment for an instrument by just looking at where the current price is in respect to the cloud. If it's above the cloud, it's bullish, below the cloud, it's bearish, and then if it's in the cloud, basically it's consolidating. That gave you instantly, it told you which way this thing could go right away within 1 second. Next workshop, we talked about the cages and the container of the trend. And then basically you could use that as your trailing stop and stay in that trade as long as it wants to go and the market wants to go up or down, and you use that safely as your trailing stop. Okay. And then last time we spoke about more optimization, talking about the red line, which is the Tinkinson. In this workshop, we're going to talk about pure optimization. We're talking about the fifth element of Ichimoku, which is the Shikao span. On my charts, it's going to be the purple line. It could be any line that's out there. But this workshop is probably the most critical workshop of all of them. And the reason why is this really is going to tell you if this is at a high probability to trend or not trend. And we'll go from there. So a lot of people use this indicator. Some people don't. On the web, a lot of people say it's useless. I'm telling you today, this is probably one of the most critical components of Ichimoku within this whole entire system. In fact, you could just use the cloud and the Shikao span, the purple line, very effectively. Okay, so that's the journey we're going to go through today. Is talk about momentum, and I'm going to give you angles based on our trading experience with it. A lot of the information you're going to have is initially we're going to give you what the web tells you, what all the ebooks, the books tell you about it, and then I'm going to give you my own interpretation of how to best use it going forward. Okay. Remember, as we do each workshop, our goal always is the KISS method. Keep it simple. Our goal is to trade probabilities, get into the trade based on technical analysis, and then manage that trade. That is how you're going to be a consistent, profitable trader. And in order to do that, to trade the probabilities, you have to keep it simple. You can't look at a chart and spend out 1 minute, 2 minutes, or 3 minutes analyzing that chart. If you do, you're going to overcomplicate things, overthink to a point you're interfering with the trade and you're no longer trading probabilities, you're gambling. Okay? And we don't want to do that at all. So, as we mentioned a minute ago, the very first workshop, which is the most critical one, we established the sentiment for the sentiment for the instrument. It doesn't matter what instrument you're trading or what time frame. We're agnostic to all that. Okay, so everything we do will always be works for any instrument in any time frame. So if price is above the cloud, you're going to look above you or below you, not forward or backwards, but above you or below you. If the current price is above the cloud, it's bullish. If the current price is below the cloud, it's bearish. And if the current price is in the cloud, that basically means you're neutral. Okay. And that's the cloud strategy completely as it is. Then we walked through and we gave you a full-blown strategy how to take advantage of the cloud. Okay. And our goal always is to make money. To do that, we have to look at money management. For money management, the best trades are where you get the highest reward risk. And in order to do that with Ichimoku, you really want to get in at the beginning of the trend. So your goal is to trade as soon as it comes out of the cloud, whether it be bullish or bearish, it doesn't matter. But that's where you have the biggest reward risk because that's when the trend is starting. So when it's in the cloud, it's consolidating. If it comes above the cloud, that's the start of the beginning of the bullish trend. So that's when you want to get in. If it comes out below the cloud, that's the start of the bearish trend, and that's when you want to get in. So that's what this went through, step by step, talked about everything in detail. Okay. Now what we're going to do is we're going to talk about momentum. And if you look here, the Chicago span basically represents momentum, okay? And all it is it takes the current price, the current closing price of the current bar, and shows you it 26 bars ago. That's all it's doing. And the reason why is that Go Shiosada, when he invented Ichimoku, and remember, back then there was no computers, no internet, nothing at all. So he couldn't really scroll back that much at all. Okay. So what he did was he wanted to see how current price was compared to what it was 26 bars ago. If you're above the price from 26 bars ago, that means you have a bullish momentum. If you're below the price from 26 bars ago, then you're bearish momentum. If you're touching it, then basically means you're still consolidating. So that was it for him. So he just wanted to see what the current price was compared to 26 bars ago. And that's his classification of momentum. So, and the reason why he did that is that if you look at the start of a trend, the start of a trend is typically ugly. You have a little consolidation pattern, but it's typically going up or going down. And that's typically what that is. And that's what Go Shiosada thought too. And that's why basically he's looking for 26 bars ago. So he's basically assuming a consolidation pattern is going to happen for 26 bars before the trend really starts. And when it does, you'll see that consolidation pattern slowly move up. So it'll be a bullish consolidation pattern that breaks out all of a sudden to start a bullish trend, and for a bearish consolidation pattern to start a bearish trend. And that's basically his assumptions going forward. Today, that still exists. You still have that pattern there. However, with a lot of volatility there, you may have these spikes now that come out of the cloud very fast without consolidating. And that's not typically starting trends. That's volatility trends, which means what goes up with volatility can come down and vice versa. So you're avoiding those type of scenarios because a real trend is going to start with very, very little volatility. Okay. And we'll show you a graphical image of this in just a moment. But basically what you're going to do is that the current price today is above the high from 26 bars ago. That means you're basically bullish. If the current price today is below the low of the price from 26 bars ago, that basically means momentum's bearish. If you're between the high and low of the price from 26 bars ago, that basically means you're neutral momentum. You have zero at all. Okay, so let's go look at a chart. This here, you can see here, this is platinum on the monthly chart here. And you're going to look here, and we're going to label this here and step you through a couple of charts so it's very clear. So here is the current bar. Always look at the current bar, which is the furthest bar to the right, and then find the closing price for this bar. Since this is a green bar, the closing price is at the top of this rectangle here, and that's right there. So that's the current closing price. If you shift that 26 bars back, that's where the price would be right here. And the Chicago span is basically the current price shifted back 26 bars ago. Okay, so that's what this purple line here. So you could see that dot here at the end of the purple line pretty much matches the current closing price, and always will be. If this is a live market, this closing price is fluctuating, this purple line will fluctuate with that closing price too. Okay, so that's the Chicago span right here, and all it is the current price shifted back 26 bars in time. Okay, and now all you're going to do, just like you look at the price versus the cloud, you're going to look here and you're going to look above you or below you. And if you see that this purple line here is above the high of the bar, this price bar here, which is from 26 bars ago, momentum is bullish. It's simple as that. Okay, any questions on that so far? Okay, and remember, you're looking at the high of the bar. Okay, always the high of the bar for bullish and always the low of the bar for bearish. Okay, so since this is there, that means you have bullish momentum going forward. Okay, let's look at another scenario here. This is where this price closed above the cloud here. Okay, now this price closed above the cloud here. So if you look at it here, you kind of tested it here, broke it here, which is kind of what we're always looking for here. However, if you look backwards, it's hard to see. There's a purple line here behind the green bar here, and that's exactly at the closing price. In this scenario here, okay, this is below the high of the bar, and it's also above the high of it's below the high of this bar right here, and then it's above the low of this bar right here. I mean, basically it's touching the bar. If it's touching the bar, that basically means we're consolidating, and at any point, this could come down and go for a pullback, which is not a good scenario at all. So even though price got it closed above the cloud and the sentiment changed to be bullish, the momentum's still neutral, which is not good at all. It means it's got a low probability to take off. It's still got a probability to consolidate, which is not a good scenario. The best trades, believe it or not, is where price gets above the cloud and also the momentum indicator goes from neutral to being bullish or bearish. So if you have price action that occurs that changes the sentiment and also changes the momentum, now believe it or not, that's the highest probability trade you have because both changed at the same time. In this scenario, they didn't at all. Okay. Here's another example here. There's a question that was, how do you handle situations where Shakal is neither bullish or bearish? It means you basically got to walk away from it. And I'm going to talk more about that in a minute. Okay, well, let's actually address it now. So in this scenario here, right here, this closed above the cloud and momentum is neutral here. So I could look at a scenario and say, okay, you know what? If I put an order a couple of points above this bar high right there, it's right there, will momentum not hit the price in the future at all? So if you look at it here, if I put an order right here for the next bar, momentum will be here on the next bar. My order has to be above the high of that bar. If it is, then I know that if I enter at that moment in time, momentum would shift from being consolidating to being bullish. And at that point, I got a high probability of success. Of course, it has to close above it, but you're forecasting where it could be. Does that make sense, John? So I'd like to do that. So if we're coming out of the cloud like this example here, I will look to place an order above the high of that bar, and I'll look to see where we're at here. And you can see here, this bar here, next bar, if I place a breakout order, I still possibly could hit this high of this bar here, which is not good. 2 bars from now, if I place a breakout order, I got a high probability at that point, this automatically goes into going from neutral to bullish. That means 2 bars from now, I got a high probability of success to go bullish. So that's my thought process there. So I probably would wait 2 bars, not the next bar, but the bar after that, and then see where momentum is. And if momentum's here, a breakout order will cause it to come into this open space, which is exactly what you want. You guys good with that? So that's the forecasting part of momentum, is that you could see where it's at now. If it's neutral, you could kind of forecast how many bars to wait to trade, or if I place an order here, I could get out away from this price and at that point get a bullish momentum for my trade. So you could kind of forecast that information there. Okay. Here's a bearish scenario here. We broke below the cloud here. So now the sentiment is being bearish. We didn't test and break it like we like to. But this scenario here, now with momentum, we could get away with some trades where we don't test the bottom of the cloud and we break out. So this is a scenario that's different from the strategy we gave you. So if you look here, we broke below the cloud here, and momentum right now is touching price. That means it's neutral, okay, which is not a good scenario at all. And then you could see in 2 or 3 bars, price will still be here. In order for this to completely go down, either I wait for at least what, 1, 2, 3, 4, 5 bars to enter, or what I do is I do a breakout order somewhere down here below the low of these prices here. And if I do that, then the momentum will also shift to be bearish. Is everyone okay with that? Yes. And if you look what happened here, okay, and oops, right here. So look what happened here. When we looked at it here, there's price right there, it's right there. Then this bar occurred here and momentum went up here, it's still touching price here. This bar right here closed right there and it's touching that right there. You guys see that? So you know now if the next bar here, it's got a high probability where it's going to shift from being a consolidation momentum to being bearish. So in this bar here, you could look to enter low here, you do, and you can see momentum now is being bearish. So even though this didn't close below here, you still got momentum in your side, and it helped you take this trade here. So you could kind of forecast where to place the order, or what you could do is wait till it becomes neutral. Becomes a bearish sentiment. So this bar right here, you knew it became a bearish sentiment. And then what you could do is place an order below the low of that bar here. And at that point you enter here, that means price gets far away from the price from 26 bars ago, and momentum now gets stronger and stronger and stronger as it goes down. The key here is it was neutral here. It's bearish here, but it could go up. If it goes for a pullback, it could touch price. And at that point, you could kill your trade. So what you always want to do is, when I trade this, and we're going to talk about this, is that you just don't look at it where it's at now. You think about the process. If my trade goes for a pullback, will momentum hit price in the past? If it does, then that's not a good trade at all. If it goes for a pullback and doesn't hit price in the past, that means momentum's good and I could survive the pullback. So that's how I do forecasting with this momentum indicator. Okay? Questions? Now, you read any of the books, anything online, they're pretty much just going to tell you to look at the purple line and look to see if it's bullish and bearish, and that's it. They're not going to talk about forecasting or anything else at all if they just keep it pure and simple. And it really kind of kills the nature of everything here, because you really want to forecast in order to be able to determine what to do. And like I said, you always want to see and say, okay, you know what, I entered the trade, and if I get a pullback, will momentum go against me? And if the answer is yes, then it's not a good trade at all, okay? So these are things that I've learned from my experience now with Ichimoku, with all the years there. So all this is still the same here, okay? The difference now is that before we're looking at current price and you look at the momentum indicator, you want to make sure it's above the high of the bar in the past. But I'm also telling you, based on my experience, also to make sure it's above everything else in the Ichimoku world. So wherever momentum is, look to make sure it's above the cloud from that 26 bars ago, above the price, above the Tenkan-sen, the Kijun-sen. It's above everything, okay? If it is above everything, then that's a great momentum trade. If it's below everything, that's a great bearish momentum trade. And I'll give you some examples of that in just a moment. Okay? So here's an example here, and you could see here we closed above the cloud here, okay, which is right there, okay. So now if you look backwards, this is the momentum right there, and you can see here in the momentum here, right there, it's above the price from 26 bars ago. It's above the green line, which is the Cadenson. It's above the red line, which is the Tinkinson. However, it's above this gray line here, which is the Senecal A. However, it's below the SKB, which is a Senecal B, which is not good at all. So this is not a good momentum trade in my eyes at all. So even though this broke above the cloud, you still don't have a complete strong bullish momentum trade. So I would walk away from this. Okay. Is there any certain market conditions where you ignore Chicago confirmation? No, I don't. I mean, you could be an aggressive trader and kind of forecast it coming out of price and go ahead and enter assuming it's going to come out of price at the end of that bar. And you could be aggressive that way instead of waiting for confirmation. But that's doing forecasting. Does that make sense, Jay? Yes. So either you wait for it to completely come out or you forecast it and say, I'm going to place an order here on this day and time, and you're going to assume it comes out of it and place that trade. So you enter assuming momentum is going to be going to either bullish or bearish. And at the end of that bar, you have to evaluate if your assumptions are correct or not. And then if they're not, you have to exit that trade. If they are, you stay in that trade. So over here, when this came out of the cloud here, I know I need this purple line here above the cloud here. So I could put an alert up here or order up here. And if price gets to here, at that point, I know I'm going to be above the cloud and I know momentum will completely be good. And I could enter at that point. So here, I can't enter anywhere here. The only place I could enter is where up here, where the momentum will be above this cloud too. So my breakout entry would be way up here. And you could see that it never got there and reversed. But if you had entered this cloud breakout strategy here, you would have lost. So that's the difference this indicator is going to make for you. The momentum indicator is going to filter out and improve your win-loss ratio drastically. Okay. So here are some examples here. This is recent NASDAQ here. You can see we tested it here and then we closed above it here. Okay. And if you look at the closing above it here, you're still in the cloud here. And this is a perfect example here. So momentum is above the price from 26 bars ago. And I'm looking at the purple line on the bar before this arrow. Okay. So we're looking at this is when it first came out of the cloud here, which is pretty much the purple line, which is right there. So we are above the price from 26 bars ago, which for normal people on the internet, that's good enough. So they're looking to enter. For us, we're looking to make sure it's above everything. In this scenario, it's not above the cloud at all. So at that point, you can't really enter here, okay? So what you can do is you could do forecasting and say, well, if I enter above the high of this bar here, the purple line will be above the cloud. So I could enter on this bar here as soon as it breaks the high here. I could enter on the assumption that at the end of that bar, the purple line will be above the cloud, and it was in this scenario. So I would enter here a couple of points above it, and I'm good to go, okay? If you're waiting for a confirmation, you would have to wait for this bar to finish, and when it did, the purple line is definitely above the price from 26 bars ago and the cloud and everything, and then you could enter in the next bar. So If you're waiting for confirmation, you would have entered over here. If you weren't waiting for confirmation, you're forecasting, you would have entered over here. Okay? Big difference, isn't it? And you can see this worked out really, really well here. Now, by using momentum, you can kind of relax on the rule of where you're looking for price to test this cloud here, or even the 2 or 3 bars in the cloud. So what I went through before was a high probability strategy, assuming you had no momentum you're using. Now with momentum, you could kind of relax some of the previous rules, the prerequisites here before it comes out of the cloud and start using momentum for the relaxed rules. Okay, here's an example here. And this arrow right here is right there. So we closed above the cloud here. And if you look at momentum, momentum's right there. Okay. And you can see it's above the price from 26 bars ago, but it's below the Tinkinson right here, which is not good at all. So, but what you could do is create a breakout order above that, so momentum automatically gets free. And you can see it never did that at all. Next bar, it touched here and then wiggled around, but it never got above to this high right there, where you would break this pivot, the high right there, and momentum would be good. And so if you had entered this trade here, you would have lost. By using momentum, you saved yourselves in this trade. Okay. Here's another one. This is the DAX 40 on a 30-minute to kind of show you day trading scenarios here. And you can look here, we tested the cloud here. So we got that scenario, we got all our conditions here. This broke here and closed here. And if you look here, when this closed below the cloud, momentum's right there. So we are below the price from 26 bars ago. We're below Senecal B, we're below Tinkinson Cadence and everything there. However, we're above the cloud here, okay? That means this is not an ideal trade at all, okay? So this is the thing where you have to make that decision. Are you willing to take this or not? And if you do take it, assume you better understand one thing. You need volatility to keep you going down. So if you're going to take something that's going to, if you're below or above everything except the Senecal B here, okay, until momentum gets free, you cannot use the red line or green line. You have to use the previous bar, high or low, as your trailing stop in order to take this trade, okay? Because you're depending on pure volatility to take you down, and you can't have any scenario where this could reverse on you, because this momentum here is going for this cloud here before it frees up to itself to become bearish. Questions? Okay. Here's another trade here. This is where we got above the cloud here and here, right there, and that references the momentum here. And you can see here, it was touching the green line just a little below it here, okay? So if you place a breakout order here, momentum would be freed up, you would enter this trade here, and then look what happened. You did get stopped out here. So look what happened here. This went for a pullback. It went for a pullback. The moment it touched price, it drowned it down lower, okay? And then look what happened here. Over here, we came above the red line here, and that's when momentum shifted here, okay? So you could see that when you enter this trade here, if it had consolidated, momentum would have hit price here, okay? And at that point, drowned. Or if it decided to go for a pullback, if I entered, I could hit price or hit the cloud or anything, and at that point, I could sink. So this was not the great time to take the trade at all. The best time to take the trade was here, where anything if I place a breakout order above the high of that bar here, this will get momentum in this open space here where it could trend. So the key in Ichimoku, believe it or not, in looking at all the rules and everything we've gone through the workshop is, if you want to optimize, you need to forecast, which most people don't do. You need to look to say, okay, my momentum, what is it? It matters what the momentum is today, right, for you to enter that trade. But also what you need to look at is, if I go for a pullback, will momentum change to be against me? If the answer is yes, it's not a great trade at all. Okay, so here, if you enter this trade here, and if it went for a pullback, which it did, okay, at that point right here, if it gets below the previous bar low, right here, it started getting lower here, it's going for a pullback, and you can see here, it's touching price. At the moment it starts doing that, you need to get out. So if you're entering these trades and you entered here, like here, and you entered right there and assuming it's going to keep on going up and not hit price here, that's perfectly fine. But keep on putting alert at the previous bar low, and if it gets below there and goes for a pullback, see if your momentum could get touching price. If it does, you need to get out. Anytime you enter a trade and that momentum goes against you, you're going to lose. I promise you that. So you've got to make sure you can't get into that scenario. So you have to you have to look to see, if I go for a pullback, what will happen to momentum? If momentum is still far away from price and everything, your trade could go for a pullback and no issues at all. And if you look here, that's what it's doing here. Notice one thing. It went for a drastic pullback here, broke the red line, broke the green line. But notice one thing, momentum's still strong. This is why it kept on going up, down, up, down, up, down. And it kept on surviving because it was still above price. Okay? So let's look at live charts. Is there anything in particular you guys want to look at? We can. So we talked about this yesterday on Val Talk, gold. We talked about the report coming out, and Ryan, all of us basically talked about gold here. We looked at the Valetax dashboard, and it basically talked about how there was high probability based on pattern recognition that this could go up. Okay, and if you look at it, they said on the weekly time frame it could go up. So let's look at this here, and notice one thing. When we were here, we closed below the cloud here, momentum was here. So we're still above the cloud here, okay? So you could take this trade with a trailing stop. Let me zoom in some. So, and let's do this. Need to shift my chart down a little. There we go. So I just want to show you this. When this came out of the cloud here, right here, this was gold here on a daily time frame. Now, this sentiment changed being bearish, and a momentum here is bearish, but it's not below the cloud. So this is still weak momentum in my mind. Remember, everyone on the internet is just looking at this. I'm not. The reason why I'm here today and mastered Ichimoku is, and we've done a lot of publications, is because of this scenario here. It's not below the cloud. That means basically that this thing could reverse on me any time at all. So I need to be careful. So if I'm entering this trade here, I'm not going to use the Tinkinson Cajunson as my trailing stop. I'm going to use the previous bar high as my trailing stop. So I can enter below the low of that bar right there. And I did. And then I used the previous bar high as my stop. So I would enter here and I will exit here. I'm not going to get breathing room at all. And the only time I can start using Tinkinson and the Cajunson here is when momentum is completely below the cloud. And it never got to that scenario at all. And you could see here from the price action here, look what happened. Okay. And let me turn off the replay here. And that way you could see exactly what happened here. So notice one thing, only for a little while here did it get below the cloud here, okay? And if you look at where that was right there, okay, that was roughly closing price, up, that was here. So that was roughly about right here. Right here is when this momentum changed being bearish. When this was bearish here, and let me show you that. This is the moment momentum went bearish, okay? Now what happens is the momentum's bearish, but we're above the red line and green line, which is not a good scenario. So if I place the order below that green line, then at that point, I could be good on every aspect, okay? So let's do this. Right here, and notice one thing. If I placed the order below that, it never got triggered at all, so momentum went down. It decided to go for a pullback. By going for the pullback, momentum got into the cloud, okay? And then finally here, momentum started getting free. Price here is going down, 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 but the green line is below me, which is not good. It's got to be above me, okay? By the time I get below the green line here, momentum now is shifted to being neutral, okay? And then look what happened. Then momentum went bullish, even though I'm below the cloud, it went bullish, touched price here, and now it's killing that trade. So this here is telling you, momentum here is telling you, this is not bearish, because just because it's below the cloud does not mean it's bearish. There's a problem with the sentiment. And until price gets above the cloud, everything here, it's not going to be bullish. If it's not bearish either, because price is not below the cloud here at all. And you could see here that even though price was below the cloud, momentum really wasn't there. So it's really not bearish at all. And this is one reason why on the call yesterday on the Valetax, we say it's consolidating, but yet it's got a high probability to get to the bullish level, the 4,800, and break it. And if you look what it's doing, and we talked about this in the next within a week or so going bullish, if you look at it here, price is consolidating right now, and then here, Wednesday, you got a high probability here on the 20th, not this Wednesday, the following Wednesday, it's automatically going to be above the cloud. And notice one thing, momentum will be here too. So if it gets above the cloud and breaks out, both price and momentum can be above the cloud, not this week, but next week. And at that point, this could start a bullish run. And that's kind of what I'm looking at. So if it tests this resistance here and it gets above the cloud here and momentum gets away from everything here, this could start a bullish run to retest the highs, believe it or not. And that's kind of what we're looking at here. If it holds this level here, it's never going to break out of the cloud. And at that point, price could come back below the cloud here. And if it does, momentum could get into this free space here and could start a bearish trend. So if it breaks this here, we could start a bullish trend because the price will be above the cloud and momentum will be above the cloud. If it breaks this level here, price will be below the cloud and momentum will be below the cloud to start a bearish trend. So this is why those levels were very, very key that we talked about on Val Talk yesterday for gold. Does everyone see that? Yes. So that explains that one. Let's look at XTI, XPT, I think. Crude oil. Let's look at crude oil. Let's look at crude oil here. So even though we're above the cloud here, notice momentum's touching price, touching price. Here we freed up, right here. But if it goes for a pullback, it could kill the trade, the bullish trade. If it consolidates, it could kill the bullish trade here. Okay, and that's exactly what happened. We came up here, it decided it wanted to do a pullback. It did a pullback, it touched price. As soon as it touched price, it killed price from going up, came all the way down here, and now it's trying to go up. If it comes up, momentum will be in this little valley here. And as long as it can keep on going up, you're fine. But if it decides to consolidate, basically it's going to kill the trade. So you're really not going to get any momentum here at all for crude oil to go bullish or bearish until you completely break out this level here, get above this line here, right there. Once you get above the line there, you could possibly, okay, be above the cloud, be above everything. And if it gets above this, right, this momentum here, above that level right there, after this date, there's nothing here at all right now. So really, crude oil, if it keeps on going up, by the end of this month, if it comes above this level here, 110, it could actually start a trend to the bullish side where it could go to 120. If it goes bearish and breaks below the cloud here, it's going to be below the cloud there, and momentum could be below here, and you could now retreat and come all the way down back lower. So you're consolidating crude oil, but you could see kind of where momentum could kind of get freed up in order to start a trend. Okay? Any questions at this point? So the big key is forecasting, okay? And not just literally reading what the momentum is, but forecasting. And the way you do that is you assume worst case scenario. If I go for a pullback, will my momentum get destroyed? The answer is yes. You need to use a trailing stop if you're deciding to enter still because you're aggressive. If the answer, if you walk away from it, that's perfectly fine, right? But you need to look to see if I go for a pullback, will my momentum still be good? That's the magical part of using the momentum for Ichimoku. And that's the difference between the win-loss ratio for being good compared to being bad. It's going to be that purple line and forecasting with it. Any questions, guys? Because we're pretty much done. Okay, so we probably got one more workshop now. We're going to go through in the last workshop and discuss what we call the high probability strategy, which are 4 rules there. So that's the last component there. So if you have any questions, please feel free to ask them in the Telegram chat room. Also, if you have any questions or charts you want to look at, bring it to the next session that we have. That way we can go through them. But next session, we're going to concentrate a lot on the live charts because we're going to put everything together. The puzzle will be complete by the next workshop. Okay? Any questions up to this point? Okay? Thank you. Have a good day. Good week. Good trading week. Bye-bye.